So the concept for AAR was simple, to reduce litigation. So if you go to the AAR and the AAR rules in your favor or against you, you are bound by it. As simple as that. That means you cannot challenge it. Idea of AAR was to ensure lesser litigation and to ensure speedier clearance of cases. And the important thing about AAR is you could go to them even before the transaction was done. So even before the transaction is done, you could go to them and say, tell me, do I have to pay tax on this or not? If you have to pay tax on it, you can choose not to do the transaction. You can think of a better way to do the transaction. So this is where AAR gives you some sort of a better idea as to how to go about that transaction. So who can apply for advance rulings? An applicant would mean the following. This was the basic objective. A non-resident who has already undertaken or proposes to undertake a transaction in India. So even before doing the transaction, to get clarity, the NR can apply to the AAR. There is no income threshold, there is no tax threshold for a non-resident. Even for 10 lakhs, he could make an application to the AAR. A resident who has undertaken or proposes to undertake a transaction with a non-resident. For example, let's say there is a resident Indian company, A Limited. A Limited has to make some payments to X Inc., which is a US company. Now A Limited makes a payment of, let's say, 10 lakh rupees. Now on this payment, there is a question as to whether there is TDS or not. And it could also be rate determination. Do I have to deduct? And if yes, what rate? Now X Inc. can go to the AAR because X Inc. would fall under this clause. A Limited can also go under this clause. And the application can be made to determine the tax liability of the NR under this clause. So A Limited can approach the AAR and say, is X Inc. taxable? Okay. Although they are not going to pay tax, they can ask, because the TDS under 195 depends on the taxability in the hands of the foreign company. Non-resident payments under 195 depend on whether it is a sum chargeable to tax in India or not. If the sum itself is not chargeable to tax, then there is no liability to deduct taxes at source under section 195. So in such a scenario, I can approach the AR for this TDS purpose and frame the question in a way that I want to know about the tax liability of the non-resident. Apart from this, a resident on his own, even when there is no involvement of a non-resident, can go to the AR for transaction values of 100 crores. This was introduced subsequently. So now big transaction residents can also go to the AR. If I'm doing a merger worth 200 crores, definitely I can go to the AR and seek a ruling as to whether that merger is tax exempt, whether that merger, the losses will be allowed to be carried forward and set off for a fresh period of 8 years. Because it's not automatic, conditions have to be satisfied. So if there's a doubt, then you could go to the AR. A resident falling within the notified classes, so the CBDT may notify, and as of now they have notified public sector companies. Any person, resident or non-resident, making an application for determining whether an arrangement is an impermissible avoidance agreement. This is a concept of GAR. So you can go to the AR asking whether this transaction I'm undertaking is an impermissible avoidance agreement. If the AR rules no, GAR cannot be invoked. If the AR rules yes, GAR could be invoked, but obviously subject to safeguards under the rules. The ARs have been merged for direct and indirect taxes now. There is a single body. Earlier there were two separate ARs. So these are the categories of persons who can approach the authority for advance rulings and gain a clarity before they even undertake the transaction. When is advance ruling not possible? In the following circumstances. when the question raised is already pending before any income tax authority or an appellate tribunal or a court. That means you cannot ask for a pending issue. This is, however, waived off for a public sector company. When the question involves determination of FMV of any property. So FMV valuations, you cannot go to the AAR. When the question relates to a transaction which is designed prima facie for the avoidance of income tax. Avoidance, not evasion. You can't go for evasion anyway. Avoidance. But there is an exception to this. Following applicants are not covered by the above. Public sector companies or any other person making an application whether the transaction to be undertaken by him is an impermissible avoidance agreement, because the whole concept of that is to ask whether it is an impermissible avoidance agreement or not. It is definitely going to have a character of tax avoidance in it, because the whole premise of GAR is the main purpose is to avoid tax. So if main purpose is to avoid tax, then in all probability it can fall into the impermissible avoidance agreement, and you are going to the AR for this, and it is permitted. If you remember in the previous slide we discussed the last point, you can go to the AR to ask him to decide this. Now the whole purpose of going to the AR for this issue is to figure out whether it is tax avoidance or not which is permitted. So if that itself is barred, then nobody could go to the AR. So for GAR cases, that means you should ask a very specific question. Is this an impermissible avoidance agreement? Yes, then it will be allowed. If not, you cannot go and say, I am doing this to save tax. Can I do it? No. You can go and frame it for GAR purposes. And you have to see the applicability of GAR. GAR is not going to apply to every single case possible. It will apply to tax avoidance cases, but within a certain structure. There is a structure for GAR which has to be applied. Can the application be withdrawn? Yes, within 30 days from the date of the application. Can the application be rejected? Yes, definitely. The AR feels that the case is pending. Possible. The AR feels that it is FMV. Possible. AR feels it has already answered that question. Possible. But no application shall be rejected unless an opportunity has been given to the applicant of being heard. The reason shall also be given in the order. A copy of every such order shall be sent to the applicant and to the commissioner or principal commissioner. And AAR enjoys the power as a civil court. That means they can ask people to come on oath, ask for any information, etc. What is the applicability of advance ruling? This is a very popular question which keeps coming again and again. Can you apply advance ruling like how you apply High Court or Supreme Court rulings? No. You cannot use the similarity of another AR ruling in your case. So the applicability of AR shall be binding only on the applicant who sought it. So it's a very fact specific ruling that will be given. And remember, AR has no legal recourse under the Income Tax Act. That means if you lose the case under Income Tax Act, you cannot go up, because AR is practically the final decision making body once you go to AR. Article 226 High Court is possible, but that's not under the Income Tax Act. So the applicability of AR shall be very specifically binding only on the applicant who sought it and on the issue in relation to which it was sought and the transaction in relation to which it was sought. So this applicant cannot use that ruling into another transaction of his. He cannot use parts of that ruling into another transaction which is also similar, not possible. And it shall be binding on the commissioner, principal commissioner, and the income tax authorities subordinate to him in respect of the applicant and the said transaction. You cannot receive a notice. Even if you receive, it is invalid. If the facts and circumstances change, then definitely the advance ruling may also be invalidated, and it can be void if it was obtained through fraud, or misrepresentation. And if it is obtained through fraud, and all the provisions shall apply as if such advance ruling had never been